Well, good afternoon, good morning, good evening, wherever you are, and welcome to today's 18 group webinar entitled Unlocking Competitive Edge with Outsourcing and Managed Services in Trading Technology. My name is Mike O'Hara. I'm an editorial contributor at 18 Group, and I'll be moderating today's webinar. So first things first, I'd like to welcome our expert panel. We have Kevin Sweeney from Fidelity Investments, Jason West, London Stock Exchange Group Data and Analytics, who are sponsoring today's webinar, and David Burney of Ergo Consultancy. So good afternoon, gents. I'll ask each of you to introduce yourselves in more detail in a moment. But before we start, just some information for our audience on how you can take part in today's webinar. To the right of the video on your screen, you'll see a box for questions and polls. We'll be running two polls during the webinar, near the start of the webinar, so please do vote in those polls as it helps us gauge industry opinion, understand where the audience is coming from. And I'll let you know when those polls are coming up so that you'll see them on your screen. If you would like to ask the panelists any questions, please enter those at any time during the webinar. We'll try and address as many of them as possible, probably towards the end, but please feel free to add your question to the box under the questions tab. Just a quick mention of some of our upcoming webinars and events. On the 10th of June, we have a webinar around high performance networks and low latency connectivity for trading. Another webinar on the 25th of June on the future of market data, harnessing cloud and AI for market data distribution and consumption. And we have various events that we run, but probably the one that is of interest to a lot of people on this call is the Trading Tech Summit in New York, which is coming up on the 26th of June. And we also, sorry, no, that's the AI in Capital Markets Summit in New York on the 26th of June. And yes, let's see if we can get that right. Trading Tech Briefing in New York is the 24th of June. So yeah, apologies for the confusion there. But they're all on the website. So if there's, if you'd like to find out any details about any of the events or webinars that we've got coming up, please go to the Trading Tech Insight website and you will see them all there. So without further ado, please let me hand over to my panelists to introduce themselves, starting with Kevin for a minute or so. Tell us about who you are, what you do, how it relates to outsourced trading technology.
Yeah, absolutely. Thank you, Mike. So Kevin Sweeney, I supervise digital brokerage services, which is the broker-dealer behind Plink within the Applied Technology division. So what do? We try to make digital experiences and complete straight-through processing for all of the Fidelity ecosystem. So we do it on a small scale, and then we start scaling it out larger and larger across the Fidelity ecosystem. So my background is in trading tech, algorithms, and really straight-through processing on clearing systems.
Great, thank you. Jason.
Hi there. So Jason West, London Stock Exchange Group. So I work in the data and analytics division. My current role is running the real-time integration, which covers all of our managed services, our software, anything to do with real-time sits in my wheelhouse. I've been at LSEG for 6 years. Prior to that, I was at Citi, where I ran market data, infrastructure and engineering, FX infrastructure, and futures and options technology. Good to be with you guys.
Thank you, Jason. And last but not least, David, who has very kindly stepped in because unfortunately we had somebody who had to pull out. So David, thank you so much for bringing your expertise and insights and participating today. So please introduce yourself.
Thanks, Mike. Okay, I'm David Burney. I run Ergo Consultancy. Now, we're a very specialist trading and execution consultancy for the buy side. So we're very much in a niche, but we're deep in that niche, and anything that happens in a trading process is ours. We're probably most famous for outsourcing of trading, and we run a survey. I'm not going to get this to work now. That we produce annually on outsourced trading. You can find it from my website if you want. But we actually do a lot more than that. So anything essentially that happens after a PM makes a decision to trade, to after the trade is done, that's our world. And it's not just outsourcing. We'll build a desk, and then we would go and secure all the technology to back it up. And we'd sometimes use some in-house, and we'd sometimes outsource some. So I have a kind of wide breadth on this. Thanks.
Excellent. Thanks, David. So yeah, some great. I'm hoping to get some great insights from the three of you in this discussion. Before we start with the first question, if we could bring up the first audience poll on the screen, and that poll question is: how would you describe your firm's current approach to outsourcing and managed services in trading technology? And there are 5 options there. I won't read through them all. You can see them on the screen. But if the audience, as we go through our first kind of question and answer session, if you can answer that poll, it would give us a good idea of where people are with their approach to outsourcing. So please go ahead and participate in that poll. You should be able to see it on the screen. Okay, so I guess the first question, from a wide perspective is, what are the key strategic drivers behind the kind of, move to outsourcing and managed services in trading technology? Are they more around cost control, scalability, innovation, regulatory alignment, all of those, or something else? And I'd like to address this to you first, Jason, as the sponsor of the webinar. Let's see what your thoughts are on that.
All right. So I guess any business that is built on the cloud is in a very lucky position, right? They don't have to deal with some of these concerns that we have today. But I think if we look at some of our larger clients, depending on who you are, the benefit to you will be different. So if you're a CFO, you're looking at cost control, you're looking at efficiencies. A lot of our clients are looking at the migration from a CapEx model over to an OpEx model. If you're the CIO, you want to do funky things, right? You want to be able to have your developers code easily, get into infrastructure, public cloud, private cloud, or bare metal as a service very easily. Using all the tools and the softwares that some of our CSPs or cloud service providers provide today, both in public and private cloud, that gets the CIO and his team into a very, very happy place because they're not dealing with legacy hardware or infrastructure or scalability. The scalability is a big thing, right? I think we all know that Gen AI is going pretty crazy at the moment. Nearly everyone's got a chatbot of some certain kind. You've got to develop on these things. And to do that, you need the infrastructure, you need the tools. So we see a lot of our clients, financially, they're looking to move from a CapEx to an OpEx model. From a CIO perspective, they want an easier way of maintaining, managing, and scaling their products and their developers and whatever they're providing for the business. And then for the business teams, right, it's a pretty much dog-eat-dog world out there right now. I think everyone's seeing what's going on with the tariffs around the world. You want to be into that market as fast as you can. You've got to be able to scale, back test, understand what you're doing, and get out there and run. So for me, I think 90% of infrastructure that people run on premise today can easily be commoditized by an outsourced deal with a cloud service provider or a vendor or a partner. The last 10% is your secret sauce. Mm-hmm. It's where you make money. That's what you're going to focus your time on.
Excellent. Thanks, Jason. Kevin, would you agree with all of that? Anything you'd like to add in terms of strategic drivers?
Yeah, absolutely. So I do agree. I think for those who've seen me on other panels, I think there's 2 concepts. You're future-proofing, right? The idea that you are addressing something that for most of our careers we've seen, which is that this a spaghetti, if you will, of technologies, and they kind of bolt together and so on and so forth. With the cloud, among other new technologies, you have the ability to truly not have that mistake anymore, right? And we all know why it comes. It comes from a lot of different reasons, but it's mainly because we're trying to run time to market faster than actually the tech in our stack. So it allows you to do things future-proof because, as Jason was alluding to, we simply don't know where it's going, right? Mm-hmm. There's so much advancing with AI. So you're at least getting a path forward rather than trying to take shortcuts. So that's point 1. And Jason hit on the key thing that I always mention is it's very, very wise to outsource utility, where you just get a check mark, whether it's regulatory reporting or simple portals or so on and so forth, and really focus on the proprietary stuff that makes us interesting. right? Our business is more and more getting commoditized. So it's really going to be really probably 5 to 10% of what makes us unique is going to make all the difference. And you need all your services and all the intelligent folk that are on your teams to focus on that side. So I really think those two parts of it. There's also a third one, which is risk. I think, and again, there's twofold. This is not a clear cut because there's cyber security issues when you outsource, but there's also a benefit to risk. These folk can focus on one specific area of your platform or your stack rather than focusing on the holistic. So you almost have another line of defense in it as well. So those are the kind of things when we look at outsourcing and what's the benefit versus the challenges.
Excellent. And David, I know that you look very closely at not just the outsourcing of trading technology, but outsourcing of the trading functions itself and trading desks and so on. What are some of the kind of key strategic drivers that you're seeing?
It's interesting, actually. I'll use the standard consultant answer. It depends, because that's always a good start. But really, the answer to this is we listen hard. Because when people start talking about the problems they're having with outsourcing of trading or outsourcing of the trading technology, many times they don't actually know what their problem is. They're actually still trying to feel their way into it. And what they want is someone can actually help them and sit next to them and say, look, have you looked at this and have you looked at that? I mean, from a trading perspective, it's really easy. We can sit in the room full of a C-suite and say, how do you perceive trading? And they'll either say, and I can say this because I was a trader, they're all egotistical idiots that, are expensive and a compliance overhead, or trading is critical to our DNA and we want our person doing our trade in our office. But depending on which one of those answers you get, you've got two very different routes to go forward from here. And whether it's trading itself or technology, it's the same thing. You've got to work out what the firm actually thinks is its secret sauce.
Yeah.
Get rid of the other stuff.
Yeah.
And just to build on what David was mentioning, it's an interesting thing, separate from technology. I also spent a lot of my career on whether you should outsource the trading and not. It always does come back to cost, but what you're seeing more and more is there's certain businesses or certain asset classes that simply are less profitable than others. So when that happens, and if it's less of your business, again, you can outsource that. And this was done for a long time. It just wasn't called outsourcing. You used to throw stuff to the floor or whatever have you. Now you're taking it on a larger scale and you're actually outsourcing the trading and the expertise. Again, certain of these markets, whether it's on the commodity side or so on and so forth, it's probably wiser to outsource it than have somebody who's very costly, who really only handles the roles in just very short amounts of busy periods. And then for the most part of the day is less focused on those asset classes. Either that or you go multi-asset where you have traders trading everything. It's two different concepts that I see in the industry going on. So I think he's spot on with that.
Excellent. Excellent.
I mean, just to
yeah, go on, David.
The point here is that multi-asset world is really important. There's two things that people outsource. They either outsource everything in the trading world, they get rid of 100%, or they have their person in the office and they outsource a geography or an asset class.
Absolutely.
You've got a guy sitting in Europe and he doesn't want to do Asian hours. They've got a really good equity business, but they don't really do commodity trading terribly well. And they just outsource the bit. And it's true of whether it's trading or whether it's technology trade. These specialisms play into your strengths. Just play it across all of our classes.
Yeah, and you look at, just to build on that, like if you looked at when I started many years ago, there was a trader who was an expert in grains, and there was a expert in financials on the equity side, so on and so forth. And there was the bond guy, and used to walk around the desk and go literally drop off tickets. We're long gone on that. I agree with you 100%, and it's similar to the tech. It's amazing. Technology and human capital are kind of following the same kind of path at this point, just because there's been so much change in both necessary because the margins are getting tighter and tighter, and there's just better ways to do it, and focusing on that 10%, 5 to 10% makes you different as an entity or an organization is really key. And to be honest, trading is some of it's majorly done by algos anyway, so it's a very challenging thing to say that there's some expertise. And I've yet to see anybody on the buy side who likes the client or the trader who says, "Yeah, I do this by my gut." Those days are long gone. So,
Okay, let's have a look at the results from the poll that we put out there. So, 54% of the audience say we're exploring outsourcing but haven't committed. We've got 31% we outsource selected non-core functions, for example, data management or reporting. 8% manage everything in-house. 8% not sure or other, and 0 we outsource core trading operations, which is interesting. Jason, what are your thoughts on these poll results? Do they tie in with what you were expecting?
100%. There's no doubt about it. 0% on outsourcing core trading operations. I agree with that. A lot of our tier one clients are doing that today. They're keeping everything in-house. For me, the core trading operations are probably the algos, the alpha that they keep, their code. Everything else, like we said earlier, right, it's a commoditized stack that doesn't make you any money but costs you money. Your core trading operations and your underlying financial machine predominantly stays in-house. That's what we see.
Yeah. David, thoughts?
Absolutely. The plumbing is the stuff you get someone else to do because they're better at it, and it takes a lot. Your fixed connectivity is a standard easy piece of use someone else's, because building your own fixed engine and running your own fixed piece.
Okay. Okay, well, I'd like to come to you, Kevin, to get your thoughts on what makes a compelling business case for outsourcing, either trading functions or, elements of trading technology. What metrics or outcomes carry the most weight with senior stakeholders, and how do you evaluate the long-term cost benefits of outsourcing and managed services? Is it more than simply, the contract costs and considerations, for example?
Yeah, absolutely. So again, much like everything, there's no straight answers, but on in my career, what we see is time to market, right? So many times you may outsource to develop a concept and so on and so forth, and then decide to bring it in-house. That's one option, right? What we see often. But what we've been talking about for the last other two questions is, as we've been saying, you start outsourcing the utility. So the fixed connectivity is a very good example. When exchanges change things, right? Do you really need to have a tremendous amount of your team have to review it over and over again, or can you outsource it to people that are really focused on it? Really. So to answer this question, it really is around focus, right? What is the focus of what you're trying to achieve, right? So it's time to market. Then we do try to outsource a lot because it's just simply faster. And we try to hold on to that proprietary knowledge, right? The focus, can we do it better than the vendor, is always a question we ask, right? And the one that I think we should start exploring as we continue the webinar is around the cyber, right? And the security and such. So is there a way to do this at a cost-effective manner where we're satisfied with the security? Because I think the biggest thing that I see, the only flaw in all of the outsourcing, because it makes a lot of sense from the utility concept to the proprietary, is the challenge of managing a larger stack when it's out of your ecosystem. So that's the only negative, and it fits to the poll question. I would imagine the 54 that are kind of thinking about it, it is that big question of security. So, but it really is to really answer it's the focus and whether or not we can do it better in-house, and is it going to help our clients from a security standpoint? Is there no issue? Is there no loss of potential loss of private information, so on and so forth? I think those are the core things, because as we've been alluding to, the ability of the cloud is truly it's not even really tapped yet. Same thing with AI. So unless you bring in a huge amount of resources to manage all that, and the cost would go up significantly, you're going to have to start picking and choosing. And that's where the word focus is always at the top of our minds when we're thinking about outsourcing.
Interesting. And while you've been answering that, we've brought up the second poll question for the audience, which is, what do you see as the greatest potential benefit of outsourced trading tech functions? And there's a list of options on there, and I've just realised that cybersecurity is not one of the main potential benefits. So that would probably come into something else, I would think. But I guess we can talk about that when the poll results come in. David, what are your thoughts regarding what makes a compelling business case?
The interesting thing is almost every business case is bespoke, right? And sadly, we all think that you should be able to cut and paste these things, but even standard, we all know fixed connectivity, as much as it's supposed to be cut and paste from one to the next, everyone's got a free text field or a specialist message that's tucked in the middle of something. So uh, the interesting thing in our kind of world is what people choose. Are they choosing a scale balance sheet type provider for these solutions that they want to have? Or are they going for technical expertise? Everyone will tell you they've got an eye on cost, but it does depend really on what their problem is, how much their eye on cost is. And sometimes if it's solving a problem, cost is not the first thing. But I think a compelling business case also needs to consider what else the provider can solve for you while you're doing something. Many times when we look at an asset manager, they've got a whole range of problems that they just work around them.
Mm-hmm.
When we look at an external provider, we say to them, well, you could solve for some of these things, some of these anomalies and standard edge cases that you've got here. If we build you a process that uses someone external, they can fix these problems because they've got more flexibility and more scale than you.
Mm-hmm.
So we often end up having a conversation that is probably solving 2 or 3 other problems, as well as the one that they started thinking they needed to get dealt with.
Yeah, yeah. And anything you'd like to add on that, Jason, before we look at the poll results?
Yeah, if we take outsourcing to a cloud service provider, they are building solutions for thousands and millions of customers. If you're in a tier one bank, you're building a solution for yourself, right? It's like trying to build your own house. There's no point. Just get people in who know what they're doing to do it for you. So that's the way I think. If you can buy it, and I do that in my civilian life, right? If I can buy something, I'm going to buy it. I'm not going to make it myself.
Mm-hmm.
So yeah.
Yeah.
Okay, let's.
There is one interesting point about this. It was dawned on me after my colleagues were mentioning things on the call. There is a counterpoint to this where a lot of people, especially on the financial side, is like, oh, you got to go to chat cloud, it's cheaper. Sometimes it's not, right? So, and sometimes you need a fly swatter, you don't need a hammer. So a lot of the things, whether or not you need to use mainframe is still very good in a lot of different things. It's a low cost solution. It is extremely secure, extremely reliable, and so on and so forth. The run to the cloud is an easy answer. And, as David was alluding to, it is a bespoke solution. We don't need to throw out the baby with the bathwater. We need to make sure that future proofing, and that was the other concept that I was speaking about prior. There's certain really, really good use cases for why you would want to go to cloud, why you may want to outsource certain trading responsibility. But there's also a very, very compelling argument to keep things, clean it up a little bit. And when you do get into the cloud, you can get rid of that spaghetti I was mentioning that's all connected to all the various legacy infrastructures. That would help out everything, right?
Excellent.
It's definitely a balancing act, Mike.
Yeah, indeed. Can we bring up the poll results? We can see that as far as the audience is concerned, the greatest potential benefit of outsourcing trading tech functions is faster innovation and time to market, followed by access to specialist expertise, and then kind of equal cost reduction and something else, which I suspect has elements of cyber security in there as well. Interestingly, nobody's voted for improved scalability or flexibility or better regulatory compliance. David, what are your thoughts on that?
Regulatory compliance is interesting because when you outsource some things, you can actually outsource the regulatory obligation. Not many, but some. But many times when you outsource a function, when you outsource trading, you can't get rid of the best execution responsibility.
No, indeed.
Yeah. You can actually, if you looked at something else, transaction reporting, you could outsource the job and the regulatory responsibility. So regulatory is an interesting world because actually it's the one that we all have to jump for pretty early. We all have to basically make sure that, and I think the industry is always trying to be doing the right thing. So surprisingly slightly, we've got nothing for better regulatory compliance, but I wasn't expecting it to be the top answer. I might have thought it was something more than that. The interesting point of that poll question actually is cost reduction. Kevin mentioned it. Sometimes you don't save money. Sometimes you just get a better service. Sometimes you get a better solution for other things. So it's definitely something that you would consider in your outsourcing world. But it shouldn't always be number one. I'm not a great believer in the race to zero of pricing for everything. That's rubbish. That doesn't work. You pay someone zero, trust me, they're making money somewhere, or they're not, they're not doing this out of the goodness of their heart, are they?
Indeed.
Yeah, I think that's spot on. I think you got to look at it as in a margin, right? And that's a key thing. revenue. It's not rocket science. Just like if you run a drugstore, you're a large trading organization, it's revenue minus cost, right? So then it's the key aspect of it. I do want to build on what you were mentioning though with the regulatory. It's interesting that Noe put that in there because many people do already outsource regulatory compliance.
Yeah.
I would assume a lot of people on this call use NASDAQ smarts, right? Which is a good example. That's a very, very industry standard kind of item to use. And there's a whole bunch of them. So, it depends on when you outsource. A lot of people just think it's the cloud, right? But it's more than that, right? There is a lot of vendors. Bloomberg is a good example. Bloomberg, for most of us, is a communication channel, right? We've outsourced communication using chat onto Bloomberg. Bloomberg, a lot of us use it for data and so on and so forth. That's another outsourced solution. So it depends on how you define outsourced.
Yeah, yeah.
Um, and-
Yeah, I mean, that kind of leads us on to our next question, actually, in terms of, which functions and which parts of the trading workflow are most viable for outsourcing, and which are considered, kind of too sensitive or strategic to let go. So, Jason, what are your thoughts on which functions and parts of the trading workflow work best for outsourcing?
Right. Cool. Before I go to that, from that poll result, there was definitely no CFOs on this call. So if we look at the most viable for outsourcing, we've talked about it time and time again. Like commoditized stack needs to be moved out or considered. So if we look at post-trade processing, there's a plethora of companies that do that. Obviously, London Stock Exchange and London Clearing House are one of them. And people are trending towards post-trade as a service. That model's gaining traction. If we look at number 2, market data management, which is what I'm in and what I do. So data normalization, storage, all that type of stuff. We do that. We have a managed service. We've had one for nearly 15 years now. We have nearly every tier 1 bank in the world using it for that reason. They just don't want to do it themselves, right? It's looking after the plumbing. It's getting the content to the right applications and the right products. So again, it's a cost center, but it's a relevant cost center, because if you don't have data and you don't have the communication and the products, you're not trading, you're not in the market. So there is sort of a trend to go to cloud native platforms. If we look at algo trading, so you're in the colo, you're right next to the matching engine, you're right next to the venue. That's where your algos are running. You're not going to outsource that stuff. Things like consolidated feeds, consolidated data, that stuff is, and we're seeing a trend over the last 3 years. We've seen 25% growth in our managed service. So people are shipping that out as well. Then we look at infrastructure and connectivity. You don't want to do that yourself anymore, right? We've got IPC, we've got code, we've got loads of people out there that will deal with your infrastructure and your connectivity for you. Loads of our clients have their own ability to log on to a telco's portal and basically build bandwidth and connectivity, and it's up and running, overnight. So again, it's easy to get that stuff done. And for those of you old enough, right, if you remember the OSA layer model, the 7-layer model, network and infrastructure is in there. It's absolutely crucial and critical. You don't want to do it yourself, but if you don't have it, you're in trouble. So that's something else we've seen a massive trend with. And then, as we just alluded to, and this could be, people might not totally agree, but risk compliance and surveillance technology. There's some really good companies out there that do this for you. So, they're offering very good real-time AI-driven risk compliance and surveillance technology. Again, people are using it. Tier 1s are using it. Tier 2s are using it. Hedge funds are using it. Buy side, sell side. It's there to be bought and done. So that's what we're seeing as basically what people are looking to move out. Now, if we're looking at what's considered strategic or sensitive, i.e. this isn't going anywhere, we're looking at proprietary trading strategies and algorithms. Generally, people don't want to put those outside the building. We've had conversations with clients and CSPs where they've put CSP racks inside data centers. Makes the clients feel more comfortable, right? That they can still see and they're still feeding that machine and those algos. And then if you look at execution of algos and smart order routing, some firms use vendor frameworks and then plug in their proprietary logic.
Mm-hmm.
But that's here and there. And then pre-trade analytics and decision support, back testing, all that type of stuff, we still see our clients saying we're keeping that. We're going to keep that in-house. So there's a mixture of what's in, what's out there. But if we look at the last ones that we, explain that people don't want to move them out, that's where they make their money, right? They don't make the money out of the commoditized stuff further up, which we do see as clients pushing to managed services today.
Yeah, yeah. And in terms of the selecting the partners that can provide these outsourced services to you, I mean, what are some of the criteria that you think firms should prioritize when evaluating potential outsourced service providers? Especially, if we're looking at kind of latency sensitive or mission critical trading workflows. David, thoughts on that?
Yeah, I'm not going to take on Jason as a specialist subject, so I'm going to look at this from a slightly different angle. I mean, if we were working with a client to choose a provider, we'd be looking at stuff like provider uptime, how they do business continuity, what disaster recovery looks like. Because actually, if you've got a problem inside, COVID was a great example of how pretty much every outsourced provider of pretty much anything carried on.
Hmm.
It was an astonishing. If you'd have asked us even 3 years before that whether we could survive what we survived, it would have been a big ask. And so there are a few things. It's like how firms run, how they do disaster recovery, and then when picking them, I'd want to know how implementation works, how the charging for that process works, and controversially, with the consultants hat on, I'd want to look at the service level after you've done the sales pitch, because everyone knows that the moment after you sign the contract, you're not going to get the same level of promises as you were just the moment before you signed it, right? So thinking about what I would choose as important for a firm when evaluating providers, it's some of this other stuff. You're going to know who's good enough to do the job for you, and then you're going to pick them almost always on some of the other reasons.
Yeah, yeah. And Kevin, do you have any thoughts either on which functions are best outsourced, or how to go about selecting the right partners?
Yeah, I'll start with selecting the right one, because I think for anybody in our seats, that's the most important one, right? So most firms will give you the SOC certification, latency, they'll have all the numbers, right? The real question is it a sales pitch or is it actually factual, right? Because it's amazing as a data guy, data can come and go and data can change where you want. So the number one question I ask when I'm trying to choose the right partner is, am I important to them? Right. And it kind of lines up to what both panelists were saying. The same thing is once you're after the sales pitch, are you just one of many, many people, and then you get passed around on the sales thing, or actually you are a strategic partner? Now, I'd say I work for a large company, so it's a little different. But for smaller firms, it really, really is important to get to know everyone all the way up to the C level, right? If you can't get that kind of that ability, you are not important to them. So even when I worked at two startups in my early part of my career, that was a key thing for me to decide. On the outsourcing versus not, again, it gets around to keeping the secret sauce, as Jason was alluding to, but more than anything is, will it make me weaker or stronger, right? On the cyber side, on everything. And I think if you really get those two things, because it's funny when we were joking about CFOs and so on and so forth, and the costs, right? And I've been in meetings where you high five because you save a lot of money. I've also been in other meetings where if we pick a partner, it's exciting because what we can do for our clients. If you do it that way, it's a much better experience, because honestly, there's always cost overruns, no matter what you see, right? But if you have the right partner, they'll work with you. And COVID was a great example. I had some really good partners along the way, and we kind of connected the dots during where none of us ever saw that before. If I didn't have the right relationships and the right people that I work with, it never would have been successful. So sales pitches, outsourcing are easy when you're on a whiteboard, but when you have a problem or when you have an issue, and when you have to explain to clients on why you do business with X, Y, or Z, those are the things when it comes out. So as much as we talk about tech, as much as we talk about algos and cloud, this business in Wall Street is still based on relationships, right? So you don't get a warm and fuzzy from whether it's a tech person, a tech outsource, or a trading outsource or a regulatory reporting outsource, that's where I would say to this to everyone on this call that's where I would start raising the red flag. If you don't talk to the senior people and they say, "Oh, you're too small of an account," it's time to move on.
Yeah, yeah. Jason, I'd like to spend a couple of minutes talking about integration. Because for any I guess for any firm, there are certain things that they outsource, certain things that they do in house. What are some of the best practices around integrating the outsourced services with the existing trade infrastructure? I mean, particularly if there's kind of legacy infrastructure or legacy systems involved.
Well, I guess the first thing, go back to what the guy said.
Is it just me, or can everyone hear Jason?
No, Jay, I think.
Try again, Jason. No, we've lost your audio.
No, he's muted and come back.
Yeah.
Well, now.
Better.
Better, but a little bit scratchy. Try again.
Okay, maybe it's the Wi-Fi. So you've got to choose the right partner. That's rule number one. You have to choose the right partner. They have to know your business inside out, because if they don't know the risk to your business. And I think, as Kevin alluded to, you can save a couple of bucks here and there, but as soon as your system goes down and you break the Fed or the FCA or MiFID rules, you're going to get fined 10x more than what you save. So you've got to have the right partner. They've got to understand your business. They've got to understand your complexity. So even if they spend a year doing the due diligence to understand what they've got to untie, rebuild, and move, they've got to come up with that plan. And it's got to be a joint plan, assured and signed off and approved by everyone. And then you go through those steps to start the plan. We do a lot of MVPs and POCs just to get people confident in what we can do and how we operate. And we quite happily do those, but it's just having that absolute partnership. The people need to understand what they've got to do and how your business runs. Otherwise, it probably isn't going to work very well.
Yeah, I see you nodding your head there, Kevin. You'd like to add to that?
I think Jason's spot on with the MVPs and the POCs. This is where people in our seats have to really be careful, because everyone's going to sign the contract and say time to market, you get it done tomorrow. It really is making sure when you do these, especially large ones, you have to, before you sign any contract, you should do like a letter of intent or something like that, do a POC, do an MVP to make sure. And to Jason's point, this is where you get the people that are on the ground. And if they understand it, you evaluate the team, right? So anybody can flip together a POC, right? Because it's not to scale, right? It's a very easy concept of it. But if they come in and they ask the right questions, if they come in and really committed to it, I've had vendors who say, "Hey, I want to sit on the desk for a week or two." That's where I welcome them. Like, that is great, right? And then if it's painful to the front office or the back office, depending on the kind of integration, then you don't have the right partner. It's critical that first month or two or three is really critical to make sure that you have the right partner. And the POC is critical because you have to have the ability to get out, right? And that's, I think, super, super important. From there, it gets easy as long as you have the right APIs and so on and so forth. But if you don't have, if you're not speaking the same languages and you don't have that kind of relationship, that's really going to be a challenge. So the first thing I've done in my career is we connect the vendors to the teams that are integrating, and we make it more of a partnership than anything. And if there's not a natural partnership there, then unfortunately we picked the wrong vendor. But knock on wood, in my career, knock on wood, most of the time we're pretty accurate about that. But what Jason's alluding to is really critical. It's POC, MVP. Do not overpromise and say that we're going to do this. Time to market is always the biggest focus because it's a lot of money up front to do these vendors. You can't focus on that. The most important thing is, as we've been saying throughout this, is it going to run smooth, right? And sometimes that takes a little time.
Yeah, yeah. So, I mean, in terms of control and operational oversight and so on, I guess that's one of the areas that people sometimes question about outsourcing is how they can maintain sufficient operational oversight and agility while handing over kind of key parts of that infrastructure or workflow or whatever it may be, those functions. So I mean, continuing with you, Kevin, what are your thoughts about how firms can best do that?
Yeah, and this is a key question, Mike. And the best answer I can give is as much as you want to outsource and hand over controls because it's cost effective and it's efficient, so on and so forth. The data that they provide should be in a raw format, and you should build out your own reports that if they're doing the job or not. I think this is a one of the aspects when you do talk about outsourcing that people often kind of don't focus on, right? They just focus on the top line that the trading is working okay, that the ops are going okay, or the latency works out. But you really need to see, okay, from router to router, from port to port, where is the latency? And I think, to be honest, this is one of the things that we insource, that we actually keep the vendors honest by evaluating the data. So I ask for the raw data.
Mm,
I know that's a lot, right? And it's a bigger lift, but I think it's really important not just to take the management reports. And the other thing that I really focus on, I had a large relationship with a very large OMS, EMS in a prior life, and the most important thing to that is that we would have weekly meetings with their rank and file, but we would have monthly meetings with their management over and over again. Just don't simply leave them out on an island, right? You
mm,
have to, and this is where it gets back to the earlier question, are you a key strategic person or a client in their ecosystem?
mm.
You need to understand where they're going,
Yeah,
right? And to kind of put a bow on all of these, we've talked about that we're outsourcing commodity, we're outsourcing utility. They have other clients, right? And probably the odds are that they have similar needs. What are they doing holistically across their own ecosystem? Maybe there's best in class stuff that we didn't even consider. So what I often do with some of these vendors is I see if I can talk to their other clients and in a forum with them and see if we can get together and see if there's best practices across the entire ecosystem. But it all leads down to the relationship and keeping the vendor honest and making sure that they're meeting your needs.
mm,
Because as it gets larger and larger, many times they just kind of get put to the side and they think they're doing a very basic job or a very important job, but people just think it's getting done right. You constantly have to audit it, constantly, constantly, constantly.
yeah, yeah. David, do you have thoughts on kind of maintaining operational oversight?
Yeah, we call that not letting them mark their own homework.
Yeah, it's a great way to work it.
Yeah.
Well said. Well said.
Yeah, we don't let them. Frankly, I mean, you have to realize that some people think that once you outsource something, it's like a fit and forget.
Yep.
There aren't very many things that are fit and forget, really. This is why the cost savings often aren't as great as you think, because you've still got to do some oversight. You've still got to do some work. You've got to have some thinking. But what you don't want to do, to go back to the fix idea that Kevin's already stolen from me, but it's like you don't want to do the same piece of work that 20 of your other competitors are doing. You want the provider to do it and all 20 firms benefit. That's where you get it, but you do have to be able to measure them. I mean, this is your job. If you are a senior manager in a firm, your SMCR responsibility is to make sure that what you outsource is done well and that you can prove it's done well.
Yeah, yeah,
Underestimate it. And by the way, everyone's right. Choosing the right provider first time is critical because if you get it wrong, you've got 3 times as much work. You put all the infrastructure in, you've got to take it all out, then you've got to do the evaluation of all the markets again and put it in a third time, right? It's often useful, says the consultant, but it's often useful to have some outside eyes because people outside of your organization have probably been through this process before and they can save you quite a lot of pain.
mm.
Yep.
So,
Worst you need to do is to talk to some of their clients. The
mm,
minimum, you
yeah.
really got to find out what their clients that have been there for a while think of the service they're receiving 2, 3, 5 years on.
Yeah.
So,
And you can't, I'm sorry, you can't also just take it that they're going to be the best solution forever.
mm,
I'm saying in what a consultant's eyes
change.
are
Mm,
a very interesting eye. What I see a lot of firms do often is that they like, shoot, we made it, we outsourced this, we don't have to worry about it anymore. And you're exactly right. Like you can't, right? But now it's much like a parent child or a parent friend, like whatever you want to say, like you're still responsible for them, right? When it's all said and done, you still have to make sure. And I do see a lot of firms flaw that they are so loyal to a firm when another one right next to it is doing a better job. You got to remember you're loyal to your company, you're loyal to your clients, the vendors can come and go, and they do switch often. And you see the number one thing about outsourcing is a lot of companies get acquired, right? Depending on how big it is. And, getting back to the cloud, which I think a lot of people are interested in, is being loyal to just one cloud provider. It really is helpful to have multi-cloud, right? And then you can move back, and then you truly have redundancy, and you also have flexibility, right? You can't put all your eggs in one basket. It is, and I know that costs a little bit more, but again, as we've been kind of alluding to, cost should not drive this. Efficiency and getting the job done for your client is more important than the cost.
Mm.
And that's the key to this. And because as everyone was alluding to, pulling this ecosystem out to defend their ecosystems is never easy, right? So, and that's another thing you have to understand. If they're a critical vendor for you, the more and more your ecosystem gets surrounded by them, the more and more problematic it is. So what we try to do is we try to ring fence. In my career, we've tried to ring fence the vendors so we can pull them out if we need to. But again, it's easier said than done.
Yeah. I'd like to maybe look at some of the audience questions, because we've got a few questions coming through from the audience, and I'd be interested to get your thoughts on some of these. So, a gentleman by the name of John Colborne has asked, how critical is accurate, persistent, and resilient time and sync availability to outsourced and managed services, particularly when adhering to the regulatory compliance for Bank of England, PRA, FCA, and DORA, and for critical third parties? So I don't know, would any of you like to attack that one? Do you come across time and sync issues?
So can you hear me okay?
Yes, yeah, we can hear you a lot better now.
Good. I think the fan
You made it back.
the fan's cooling my laptop. So LSEG data and analytics, right? Our primary business is data delivery. So we have to. So DORA's just come in. DORA's a big thing for lots of our financial services clients as a regulation. We have to guarantee delivery of our data as part of that. Not only that, but multiple jurisdictions around the world, because we take data from nearly 600 venues globally and centralize that. Now, one of the things that we have seen, and we get questions a lot by our clients, is, right, if I'm going to move my workloads to public cloud, you're going to drop that data off in a colo or to my VPC. How are you going to maintain and manage that data flow within public cloud? So obviously we all know, right, cloud providers run their instances as black sites, as dark boxes, whatever you want to call them, right? So you are not measuring NIC to NIC, cable to cable, the data flowing through it. So we are still working with cloud providers to give us an indicative rate of data flow, throughput, whatever you want to call it. Ourselves, we use atomic clocks. The CSPs use atomic clocks. But they can't guarantee the data. Obviously, it'll be a millisecond here or a millisecond there, but to some people, that's a big thing. So we are fully compliant with DORA, with MiFID, with pretty much every single central bank jurisdiction, the FCA, the Fed, and everyone around how we manage our network and push our data around the world. But we do work with cloud providers to ensure that we can give some warm, fluffy feeling back to our clients that when we do deliver data into public cloud, it will make it to their VPCs. Not sure if that's fully answered the question, but it's trying to differentiate between physical and then a CSP providing network connectivity to VPCs.
Excellent.
Yeah, and just to build on, like, I think you're seeing another situation where technology is just having another struggle, which has been in existence in capital markets. It started with the timestamps, when you used to have to click on it with the timestamps. Then it went to when you had the chip cards on routers and so on and so forth. Synchronization of clocks and atomic clocks is mission critical, right? And time is everything. I think the cloud still needs some work on it, but as Jason was alluding to, the regulators are comfortable with what it is. I think it'll get tighter and tighter. Precision is still a little bit of a challenge, but it's really at the most nanosecond kind of thing. I'm seeing in the industry more and more precision getting closer and closer, but the cloud makes it a little harder, to be honest with you.
Yeah, so just on that, Mike, like our ultra low latency feed is nano time stamped
Yeah.
by atomic clock, right?
Yeah.
Our conflated feeds are not, because they're not running at nano, but they do have millisecond stamps.
Yeah.
But one of the things this is doing is the payload, the data size of those payload packets are now increasing and getting bigger and bigger, because we're putting more data and more timestamps in them. So again, message rates are going up, but the data packets themselves are going up, which can cause problems with some products and applications.
Yeah.
Yeah.
And you know, kind of I guess relevant to that is another question from the audience in terms of how do you see the increased volumes from the recent tariff-driven volatility impacting the need to outsource, or I guess, you know, how things are outsourced. So what I expect you've got a view on this as well, Jason.
I have. So our real-time network shunts 274 billion messages a day around it. Average tracking about 14 million messages a second until the Trump tariffs came in. Last week, we hit 20 million messages a second. So we're capable, we're coping, we're all good, right? We've got the bandwidth, we've got the growth. But a lot of our clients are starting to struggle with the data they're ingesting, not only into their networks and their infrastructure, right, but to their applications, to the point where we're being asked to conflate data. So where people would take full tick, we're conflating it to 4 updates a second or whatever that we can to help those clients. But this volatility is here to stay. It's just climbing and climbing. Between 2021 and 2023, we saw a 66% increase in data going around our network. Again, people now look at their infrastructure stack, their network, their servers, their CPU, their memory, and they're like, can I continue to back trucks up into my data centers and build this stuff out? Or is it something I can commoditize and just push out to a CSP or to a managed service where they can manage that growth for us? So yeah, volatility the last 3 or 4 weeks has been pretty crazy. Lots of conversations with clients trying to help them out and slow that data down. But I don't expect it to end anytime soon. Obviously, the tariffs are on suspension for 90 days, but we never know what's going to happen, right? So yeah,
I think to build on Jason's point, I think at the top of the funnel, I think we have most of the data management in a way where it's sufficient. I think for clients and for smaller firms, as it goes down the funnel, they need to manage that huge amounts of data. And to be honest, a lot of the data is not actually necessary, right? We're almost to a point where we're at, you need all the data from the large scale, but for the build algos, for the build trading processes, you really don't need all of it, right? So I think you're going to start seeing, and this is where the neural networks come in and use of an autoencoder, which we can go into. I know that's not the topic, but I spend a lot of time using autoencoders where you actually start looking at what is data that is in a pattern and what is data is not, and then sort basically saying this data is not as relevant as it needs to be. The only way we're going to solve this, it's like, talking to a child, like sometimes they just, the words, you have to pick and choose where it is. And that's kind of the same concept, what's going on with the data, because even with the Trump tariffs, if you look at all the volatility, all that up and down, the market is actually kind of where it's almost normalizing again to where it's down slightly, but the volatility is kind of, and you can see it in the VIX. But we could have a separate webinar totally about using autoencoders and the neural networks to actually start looking at this large amount of data, especially as data is cheap to manage right now. And you can see a ton of different ways. It's just getting the right data, right? And that's an important topic, which we could probably spend another 4 or 5 hours on. So I think answer the question, using autoencoders and so on and so forth, getting the data from the exchanges, getting the data from providers, as Jason mentioned, that's not the hard part anymore. It's looking at it and how to back test it on your own ecosystems and infrastructure. That's more of a challenging part, and getting rid of the data that's not really necessary,
Yeah. Sorry, Jason, can we hear you?
Oh, hear me now?
Yeah, hear you now.
So it's like, it's having data management, right? You conflate what you don't need. And for your algos, you're tick for tick every trade, right? So yeah, as long as you're managing your data correctly and you're getting the data you need at the right data rate, you should be fine.
Yeah. So we're getting close to the end now. This was gone a lot quicker than I expected. So there's a bunch of questions that we still have from the audience that we're not going to get a chance to address, unfortunately. But I would like to, as we draw to a close, to get thoughts from each of you on what good looks like. What lessons can be drawn from firms that have successfully transformed trading operations through outsourcing, and what success in the space looks like. And I don't know who would like to take that first. David, you've been fairly quiet for a while, so makes a change.
Off the hook there, Mike. Thank you very much. I think actually good needs great due diligence up front, and oftentimes benefits from an outside eye. Companies and firms that are going to make a change like this don't really know. They don't know their own organization as well as they think they do, because they don't know how to compare it to others in the space. They haven't seen what other people have done. And so what they really want to do is try and get some help to work out what they're going to do and what they're trying to achieve. Because the risk of getting this wrong is real. Risk of getting this wrong and having to redo it, we've talked about. But the reputational risk and the operational risks that you take on when you're going through a process of change like this are points that you want to be careful about. There are definitely things you don't want to end your business with. So I would say done well requires real due diligence and proper in-depth research on those providers you're talking about. And as Kevin quite rightly said, don't trust everything the salesperson tells you, because we all know that you've got to actually, it's your responsibility to know whether the salesperson's telling you the truth. Go and do some research, go and do some calls, go and check with people who are using this process, and decide what you're trying to choose for. Are you trying to choose for balance sheet, the provider's balance sheet, in which case LSEG fit nicely? Are you choosing for technical excellence? They might win on that one as well. Or are you actually choosing for cost? Because actually, generally speaking, cost is not the right answer.
Yeah. Kevin, thoughts on what good looks like?
So I'll use a little bit of symbolism, right? So in my earlier days, I was a good athlete, and I needed my sport of trait was baseball, and I needed a great glove and I needed a great bat, right? Those are extensions of me. Same concept with outsourcing. If you feel they're an extension of you, making you better, then it's a win. If you don't feel it's that, it's not. It's not the right glove. It's not the right bat. It's that simple. And as all of us have been saying, is that it's our responsibility to make sure that glove makes sense in the bat. You can't go up to plate and say, I don't have the right bat, or I can't go on the field and say that. That's ultimately good, if you will. I think that's a really, really important way to look at it. It is an extension of you. And ultimately, at some point in any organization, whether small or big, there is somebody on the line for the outsourcing, right? And they have to be completely comfortable that it makes them a better person and not a better person, but rather a better cog in the wheel, or a better person in the organization.
Yeah. And Jason, we've got about 1 minute left for you to share your thoughts on what success looks like.
Everyone's got to be in the room. So a round room, no corners to hide in, right? You want your CIO, your CTO, your CDO, the CEO, the business heads. You want everyone in that room who understands what your business mission is. That has to be absolutely clear. What do we keep in? What do we move out? Why are we moving it out? Is it the right decision? Everyone has to sign up to it. That's the biggest thing in the world. If they don't, there's going to be problems. But, you've got to have everyone there. Everyone's got to be pulled in the same way.
Excellent. Well, thanks very much, gents. This hour has gone so quick, and we've covered a lot of ground. I'm sure we could have continued the discussion for another hour or more, but thanks very much for sharing your insights. And a special thank you to LSEG Data and Analytics for sponsoring today's webinar. Before we close, just a reminder again of our upcoming webinars on, let's see, what have we got coming up? We have the high performance networks and low latency connectivity for trading on the 10th of June. Future of market data, harnessing cloud and AI for market data distribution and consumption on the 25th of June. And we've got our events as well. So trading tech briefing in New York on the 24th of June, and the AI in Capital Markets Summit in New York on the 26th of June. In fact, in London before then as well, we have the AI and Capital Markets Summit in London on the 22nd of May. So hopefully we'll see you at some of those. I guess the last thing for me to say is to thank the audience for coming along and participating. If you'd like to complete our feedback form, we do have a feedback form on the site. We're always very interested to get audiences' feedback on these webinars. So please do fill that out. Thanks again to Jason, David, and Kevin. And that's it for today. It's 4 o'clock UK time, and that's the end of this webinar. Thanks very much for participating.
Thank you, everybody.
Thank you.
Cheers.
Bye.
Bye.